We begin with a manic Monday for international markets, with stocks across Asia and Europe plummeting. That's in response to U.S. President Trump's tariffs announced last week. In Germany, the main DAX index dropped around 10% at the start of trading, but has now recouped some of its losses. Political leaders are expressing alarm, including Germany's Chancellor-in-waiting, Friedrich Merz. He's called for swift action to secure the country's competitiveness. In Asia, Hong Kong's Hang Seng was among the hardest hit, closing down more than 13%. The carnage also continuing from China all the way to Australia.
A terrible day for markets across Asia. Equities in Shanghai slumped 7%. Hong Kong's Hang Seng index saw its biggest drop in nearly 30 years. Share markets in India, South Korea, and Japan also nosedived in response to the sweeping tariffs announced by the U.S. last week. Many nations, including Japan, are now lining up to negotiate with the Trump administration.
We must explain to the United States clearly that our country has done nothing unfair. We must continue to strongly ask the United States to lower tariffs against Japan, but the results won't come overnight. As such, the government must take all available means to ensure that domestic measures are carried out.
Some Asian states have so far refrained from imposing retaliatory levies. Many economies rely on exports to the U.S., making them especially vulnerable to Trump's tariffs. China, though, has come out swinging, slapping reciprocal taxes on the U.S. Beijing accuses Washington of bullying.
The U.S. is seeking hegemony in the name of reciprocity, sacrificing the legitimate interests of all countries to serve its own selfish interests, and prioritizing the U.S. over international rules. This is typical unilateralism, protectionism, and economic bullying.
Trump's tariffs have spooked investors, and there are fears they could spark a global recession. Still, there's hope that Trump will cut deals, allowing the markets to regain their strength.
Well, let's cross over to Singapore now, where we can speak with Trinh Nuyen. She's a senior economist at the financial services firm Natixis. Trinh, Asian markets fell sharply on Monday. Some are calling it a bloodbath. Why is the reaction to Trump's tariffs so pronounced in Asia?
First of all, the Trump tariffs are very targeted towards Asia. We're a huge manufacturer, huge exporter. It's clearly targeted towards China with a very high level of tariffs. So if you add the 34 to the already existing 20%, plus the previous tariffs, we can go up towards the 60 to 70% level. And secondly, China has retaliated, which is essentially saying that it's giving up hope of negotiations. And for the rest of Asia, the tariffs level are very high, but the impact is not as pronounced as what the drops that have been in China, which actually had a Friday day off as well, right? So you have a combination of both bracing for the deterioration of U.S.-China relationship. For the rest of the region, is bracing for the aftermath, which is basically not only we're really uncertain about what's happening in terms of tariff levels and how much that will stick. Certainly, it's negative from an investment point of view. From an export point of view, let's wait and see. But if China were to be shut off from the U.S. market, that also has a negative impact to the rest of Asia, because we're going to see a flood of Chinese goods as well.
Well, given what you've just said, it's clear that the trade war is escalating, with some analysts saying this could lead to a global recession. How do you see that?
Absolutely, because it's not just Trump proposing tariffs, it's also retaliating impact and also the uncertainty of tariffs, right? So number one, we have tariffs that's gone up in the U.S., but the uncertainty is whether or not What level do they stay? Where do we go from here? So that impacts investment in the U.S., but also given the fact that the U.S. is quite globally integrated, global companies and many companies, not just American companies, integrate into U.S. supply chains and sell to the U.S., then you have also a pause of investment globally to see how this plan out. And there's huge uncertainty on tariffs, again, not just the level, but the duration and for which market. So it's very difficult to really diversify the risk in the short term, given how broad they are and the depth of the tariffs. So as a result, we see a bit of a paralysis of the market at the moment, and that's going to impact global supply chains, global investment, and that is a huge shock to the system if it remains where it is today.
Keeping an eye on the reaction in Asia, there are some countries like Vietnam, Singapore, and South Korea are taking a more cautious approach in their response, more cautious than China at least. What are they hoping to achieve?
Well, Vietnam is heavily targeted. It has a 46% level. It doesn't gain anything from retaliating to Trump tariffs. Again, it wants to see how long this will last, to see in the immediate whether or not it can bring down the level to any meaningful lower layering would help. Because in the meantime, given the fact the U.S. is the #1 importing country of the world, it doesn't have any alternative in the short term. So it does want to alleviate the pain. There's no hope of zero tariffs, but lowering from 46 levels, for example, to 20 or 10 would be great. For Singapore, it's actually had a pretty low tariff level. On top of that, a lot of the sectors that Singapore care about, such as pharmaceutical and semiconductor and energy, is currently exempt. So it's laying low because it worries that actually, since we're exempt from major sectors and it's already a low level, we're going to wait and see what we can do. And obviously for Singapore, it's really an indirect impact on the financial sector, not just trade. And for South Korea, it has its own political crisis at the moment, right? The president is impeached. It's waiting for elections to see what will happen. And finally, even if we were to have a leader, I think their response would also be muted. It is an ally to the U.S., and it does gain from selling more to the U.S. because its highest profit margins are selling to the U.S. So it does want to wait and see. Meanwhile, if it retaliates and cuts off ties with the U.S., it actually is losing global market shares to China, and we're not sure what the EU is going to do, and I'm sure the EU is quite worried about that as well. If it retaliates, where else can it sell to, and what about the flood of the Asian goods, particularly Chinese goods, right?
Trinh, thank you very much for talking with us. That was Trinh Nuyen, a senior economist at Natixis. Thank you very much.
You're welcome. Thank you.
Well, let's get more context now from DW reporter Steven Beardsley here in the studio. Okay. Steven, remind us where we are with these U.S. tariffs and what's still to come.
Right. We've already seen some measures put on Canada and Mexico. Some of those have been withdrawn or given exemptions to the current tariffs. The auto tariffs went into effect last week already. We know that the reciprocal tariffs, which he introduced last week, the baseline 10% that has gone into effect, and the difference, for example, with the EU is 20% tariffs overall, 10% baseline, plus the 10% that they sort of figured out on top of that. That's going into effect on Wednesday. It's very easy to lose track of all of this.
It's a very strong reaction that we're seeing in Asia. We've been looking at the stock markets down there, and also in terms of China responding. But I'm just wondering what the implications are of that for American investors. American investors also have some exposure in Asia. Is this something Trump can just ignore?
Well, I would say it's not just American investors who have some stake in Asia. It's really a lot of American businesses, right? China may not import as much from the U.S. as vice versa, right? The way that the U.S. imports from China, but it still imports a lot of goods, and especially agricultural goods. So if you're a farmer in the U.S. right now, you're quite worried. And to be honest, you've seen this coming for some time. You knew that once Trump came into office, there was the likelihood of tariffs, almost the certainty of tariffs, and you knew how China would retaliate. They're big importers of soybeans, for example. They're big importers of pork. These are areas where U.S. farmers have been able to up their exports over the years. Now, we know from Trump 1, that is the first Trump administration, that those exports falling off was a problem for the Trump administration. They began paying or providing some sort of subsidies to those farmers to help try and allay the costs. But of course, when you're a farmer, your fear is losing market share over the long term, that your exports to China are going to be replaced by soybeans out of Brazil, for example, so that even when China is allowed to come back to you, they may not. So you're going to hear louder and louder voices from some of these farmers.
And there's a lot of trust that's being lost in all of this, too. Speaking about coming back maybe one day. And Trump is adamant that he's going to continue with this trade war that he's launched in a big way. Is all this fueling fears of a global economic downturn, Steve?
Yeah, absolutely. I think Trinh put it really well in your last interview. We've already seen with the counter tariffs that countries are responding in that manner. So there is this fear of a tit for tat, right? And with the EU now deliberating what to do in its response, we know that it could also escalate there. For example, on the table right now is 50% tariffs on American whiskey, bourbon. If that takes place, Trump has already said that he would put 200% tariffs on European wine. So he's, of course, trying to split Europe there a bit. He's trying to get the French to be very loud about the fact that they don't want that and to get concessions from them. And that's really what they're going to have to deal with. The EU may come back and offer other retaliation from there. So it keeps building and building and building, and it's true to say that there aren't really any winners. Consumers definitely lose out. Another concern is that, of course, those trade flows that would have gone into the U.S., these products are already being manufactured in China, elsewhere. They're going to be rerouted somewhere. So that means that Europe may need to consider putting tariffs on China so that all of that cheap stuff doesn't come in and then undercut stuff here. And that then leads to retaliatory tariffs from China. This is the fear, at least, right? So these things have a way of sprawling, and that's really the fear, is that when no one knows where to put their money, where they're safe, consumers stop spending, investors hold on to their money, jobs are lost, and we're seeing a recession.
China has launched its own retaliatory tariffs, stiff tariffs on the U.S. already. What are the implications of that, Steve?
Yeah, for sure. It's agriculture really is going to bear the brunt of it on the American side. But then you're also seeing some controls on rare earth minerals. And we're already seeing China using these kinds of export strengths to its advantage. And one of them is in rare earths. These are minerals that are used by tech companies across the world, but especially in the U.S. They could be for everything from LCD screens to battery components. China has, oftentimes, it has the vast market share of either digging it out of the ground in the first place, mining it, or also refining it. So they're already starting to pull some of those levers and show where they can make it really hurt for the U.S. That's going to hurt those companies. Anyone who's investing in those companies is already thinking twice about what these new export controls mean. So there is a lot of pain there.
Some countries, including Japan, one of the U.S.'s closest allies, they're talking about trying to strike some sort of deal with Trump. What could these negotiations, if they were to start, look like?
We don't really know the specifics of any negotiations right now. And with Trump, it's often very difficult because you need to have him one-on-one. I think this is what many political leaders have discovered from the first term as well. The question is, does he want simply a lowering of tariffs? Does he want these countries to buy more imports from America? What exactly does he need? Does he need other concessions? Like from China, he's over and over said that allowing the sale of TikTok would be a concession. When it comes to the EU, a lot of the trade barriers with those economies are actually due to different product standards, chemicals that are used in U.S. products but not in European products. Can they lower themselves to that level? Most likely not. So it remains to be seen.
Steven, thank you very much. Our reporter, Steven Beardsley.